Welcome back to Black Cat Chat. My name's Andy Clow from Black Cat Building Consultancy. I'm the marketing director here. Today I'm joined which is the first time for us, I'm joined with someone returning into the hot seat by popular demand. Can we say popular demand? Ben said no, let's put it that way. But so we've got Stephen Barnes, or Barnesy as he's known within the firm. And for a change, we're in here to not just talk about yourself and the business, which has been great. We're moving on to some more of the nitty gritty about the industry. And specifically today, professional indemnity insurance. So, Stephen, you're an expert in this. Can we say that?
I do a lot of it.
Yeah, do a lot of it. And you understand what, obviously, and you've set out what makes Black Cat different in the sector, in the industry, and really why it's important. So, educate me and educate some of our audience.
Yeah, I mean, look, PI insurance, professional indemnity insurance, is something that we're all aware of. And I think until Black Cat, it was something in previous lives I took for granted an awful lot. I didn't really fully understand it. As a building surveyor working in another business, you make the assumption that you've got professional indemnity insurance. You're told you've got professional indemnity insurance. Quite often, you've never really seen what the policy is. You don't fully understand it. And almost certainly, you don't understand the limitations and the restrictions that quite often apply to those policies, which is really interesting. One thing we've done from the outset is every year we work really carefully with our broker, Surveyor Insurance, a guy called Daniel Atkinson, and we spend a lot of time with him making sure that we get the best possible PI policy without limitation, without exclusions, and we make sure that our whole team get to see that policy, they understand that policy, and we do quite a lot of work with them so that they understand that we can do everything, which is not the case for a lot of surveyors.
Right, okay. Now, if we just roll it right back, that phrase that you came up with me when we started doing these was about, the good thing about me sitting in this chair is I'm that 6-year-old in the room, which I took as a compliment. And so if we look at this as very much what is it for?
So in our world, which is property consultancy, multidisciplinary advice, there's 3 types of insurance. There is everything that goes on sort of within the office, which is buildings and contents insurance. There is public liability insurance, which is the bit that happens outside of the box. So that's when the team are on site doing their thing. If they happen to drop something off a scaffold and it injures someone, if they have an accident, if they reverse into someone, whatever, that's where that policy comes in.
It's a far more familiar type thing for day-to-day life, but this is where it's different.
People confuse that with what we're now interested in, which is professional indemnity insurance. Professional indemnity insurance is the bit that we provide to our clients based on our outputs, our work, our advice, what we build, what we develop, the advice that we give. And it's our promise, if you like, to our clients that, look, what we're doing for you is the right thing to do. It's in doing it in the right way. It's compliant. And what you'll end up with will be fully fit for purpose. And if we make an error, if we drop the ball, if we make a mistake, we've not done that in 10 years. But if we do, we've got this great policy here that covers all bases that will make sure we can put you back in the same position you would have been had we done the job properly without the error.
Yeah.
So the good thing is with that, the client's covered, it puts them back in a position they would have been. It covers the consequential losses or quite often that go with all of that. So they might have to take a tenant out of the space. They might have to do away with the rent whilst they put something back. And it also makes sure that we individually are protected from liability that otherwise, under recent case law, could go directly to the surveyor themselves. So it protects the team.
Amazing. Okay. And so that's across the board, and something we touched on yesterday in the kind of planning for this chat is the understanding that we're a director-led business, right? And so it's showing that confidence in every single individual. And so every single person is covered no matter what level they are here because of the way that we work, because we've got the 2 directors working on projects, etc.
Yeah, so we're quite careful about the way we produce work. Great advice comes from experienced people who ultimately that position of experience comes from having made big mistakes historically. And it those mistakes are never made again. We, as a business, have built the business around very experienced directors.
Yeah.
And we have quite a few checks that sort of fall into place to protect the work that we do and ensure the standard of it is as high as possible. So we have 2 directors on every job.
Yeah.
When we produce work, it gets an admin QA, it gets a professional QA, and before it goes to client as a draft. And we're quite careful about the outputs because we have to get it right. It has to be good quality work. And we do have a number of graduates now, but we're doing it sort of the old-fashioned way. We're trying not to let those make mistakes because they are carrying bags and they're doing what I did. I spent 2 years copying plans, and we are doing it the old-fashioned way so that ultimately they're never providing advice. They are supporting a director who is providing advice. It's really important.
That's really important for us as a business. So as a product, something when I started at the team, something that definitely came from you was there's this explanation of us taking our PI insurance to a greater level than other companies, whether smaller, same size, even bigger than us, offer. So run through that. What's the difference?
Yeah, so some of the things that we've learned on the journey with Black Cat is that PI insurance isn't often what it appears. And I suspect that most clients, most surveyors don't fully understand professional indemnity insurance. Yeah. In fact, by most, I bet 75% don't fully understand it. What we've learned, and it's over the years getting different policies, and we've been helped really, been helped a lot by Romero, is that quite often within the small print in a 200-page policy document, there will be exclusions and limitations to the PI that you provide. And it's really interesting because the RICS provide guidance on what we have to have. Yeah. The guidance that they provide is pretty vague, is an understatement. And in fact, I'll read the guidance that the RICS say that all accredited, regulated businesses providing building consultancy services must provide. And they say that firms must ensure that all previous and current professional work is covered by adequate and appropriate professional indemnity cover to the standards approved by RICS. Now, that's vague.
Even I can tell that's vague.
Really vague. And then they provide a little bit of guidance later on in terms of minimum limits of indemnity. They say that a firm with a turnover of up to £100,000 should have indemnity of £250. And they say that firms up to 200 grand, 500 indemnity, and above 200 grand ought to have £1 million worth of indemnity. But £1 million is not a lot. I would suggest to you that anyone with £1 million worth of public liability insurance ought not to be doing projects or building surveys on anything that is worth more than £500,000, because the consequential costs of getting that wrong, there's easily going to be the same amount again in other costs that come in. So, it ought to be proportionate. And therefore, if you are buying a building that's £10 million value, you need to make sure that surveyors that are quoting are going to give you £5 million worth of PI as a minimum. So, and when with a project, if that project is going to be worth £2.5 million, you want to have £5 million worth of PI. And if it's going to be a £5 million project, you want £10 million worth of PI. Now, going back to the point of appropriate and adequate, this is the bit that for me is just too vague. So I'm aware of firms, as we recruit people, we come in, we educate them about PI, and they're always pretty surprised that no one's ever explained it to them. And some of those people who've come from certain firms have been aware that they've had an exclusion in their PI. Mm-hmm. And there's a couple of really big exclusions. One is the word fire. Okay. Now, as a building surveyor, to not be insured to comment or advise on fire, I mean, that could be everything from fire doors, fire compartments, staircase, escape routes. And it begs the question, what are you insured to do? And that's a common exclusion. Quite often there's a sublimit for fire, but the sublimit will be down at £1 million for some people. Now, that's not adequate in my view, but there's no measure of adequate in terms of the guidance that we're provided with. Another really common exclusion in a lot of PI policies is basements.
Bear in mind that. Yeah.
You know, what building in London doesn't have a basement? Yeah. Now, the interesting point is when clients go out to the market for competitive quotations, they'll get 3 quotations back, and they presume, and correctly, why wouldn't you presume otherwise, that all of those quotes are backed up by adequate PI. But if that quote is from a surveyor that isn't insured to provide advice around fire, or they're not insured to provide advice around buildings with basements, the report they're getting is worth what? So it's really interesting that no one talks about this stuff. And what we try to do with the whole team is we sit them down every year after the discussions with brokers, after we've had the renewal documents through, and we talk through all the bits and pieces. And then also what we do is when we get new employees in, we try and get them to bring with them policies so we can look at what we're competing against, and then we go through those with them to go, look, this is the gaps in the market. But for me, there ought to be better regulation, because I want all of our clients, and in fact, the whole industry, if they're going to RICS accredited building surveys for professional advice, we as an industry ought to make sure as a minimum standard that we are giving them adequate and suitable PI insurance that does not have exclusions, or if we do have exclusions limitations, we should be required by our regulation to disclose those alongside our quote, which we're currently not.
I think the bit that seems to be missing, is an education piece within the industry. Like you've explained, we educate, others don't. But from a client side of this conversation, you go to experts in no matter what field you're looking at. You're not the experts, you go to the experts, and you may not know to ask these questions. And you may not know the difference when you've got 2 contracts or 2 offers in front of you to look for these pieces. So with our team, they're educated enough to actually go through and show, right? We do this, delivers to this amount, we cover everything. Whereas a competitor might not do it, our team might not have done it at previous places. But how hopefully something like this conversation here might help educate the client. What should the client be asking for in that situation?
Well, it's fairly simple in terms of the words they ought to ask for when they ask for a quote. For me, it should be, please provide a fee quotation, and please confirm in writing whether or not your professional indemnity insurance is subject to any exclusions, limitations, or sublimits. And then alongside the quote, the people providing the quotes have got to set that out. That's what they've been asked to do. And ask the right question, they will always respond. If you don't ask the question, quite a lot of firms will just stay silent on the matter.
Well, if they've excluded it intentionally for financial savings, then if an industry standard, like you were saying, was set, which we're hopefully setting, that people adhere to that, then it does make it much better for an industry-wide reputation.
There ought to be a more considered approach to it. The numbers in the guidance are just 20 years out of date. They're not fully considered. They're not considered from a professional, commercial perspective. They might be fine if you're churning out lots of low-value work in a small town as a sole practitioner, and it works for that. The guidance does not work for the bigger businesses that we've become, and the advice that we now provide on multi-million-pound stock. It's not fit for purpose. And it's really become apparent. I was chatting with a few different people who've joined us recently to add bolt-on parts of the business, and we've spoken to a few different firms who've approached us to work with us and merge with us. And one of the early discussions we always have is around professional indemnity insurance. And some of those questions have been, can you disclose to me any PI history, any claims, because that's important. We don't want claims. We seek to avoid them. And can we talk to, let's go through your PI insurance. And they're always a little bit shocked, why do you want to talk about PI? It's like, because it's at the centre of what we do. And I'd like to understand the sort of work that you've been doing, the way you've offered that PI, and if you've provided those services by way of deed, we've got 12 years obligation to continue the PI insurance at the same levels.
Okay. Yeah.
And what shocks me a little bit is the lack of knowledge around that. There's an assumption even from some of those firms that no one ever asks about PI. It's not that important. Don't worry about it. We've agreed to PI at all sorts of levels, but it doesn't necessarily coincide with the insurance that we've got. Now, to me, that doesn't make sense in any way. You've got to know what PI you've offered, on what instructions over time. You've got an obligation for 12 years under deed, 6 years under hand to maintain that PI at those minimum standards. And quite often in all of those appointment documents, we've got an obligation to notify the client if those PI levels change or become lesser over time due to market restrictions. So if you don't know all of that stuff, you can't engage with them. Now, that's all from a client perspective, but equally it's as important for individuals and surveyors. Yeah. We had the Merit versus Babb case back in 2001, and the crux of that was that a business failed, and because they'd failed, they hadn't maintained the PI insurance. The PI was no longer available, and the claimant there successfully recovered damages from the surveyor who personally prepared the report. Now, if you take the principles of that there is a degree of personal liability, there's two things we do as a business to try and prevent that. We make sure that our PI covers all bases with no exclusions, because on the back of that case, if we've got exclusions that we're not insured for, it follows that there might be some personal liability that goes with it. So it's our job to make sure the surveyors are protected. And then we also build in clauses to our appointment documents to try and protect our surveyors, our staff, because look, work is really important to us. Every surveyor we have is passionate about what they do. They will do their damnedest never to make a mistake. They've never made a mistake in 10 years, but the one time that mistake happens, you never want to see anyone at risk personally of losing the house, losing their livelihoods to try and reinstate the error they made.
The numbers you're talking about for a business would be very difficult to handle, but let alone an individual. So
for me, every chartered building surveyor working in any business anywhere ought to be demanding as a minimum sight of the PI policies that their business operates by. You cannot work in this industry on the assumption that it's okay and your employer, the business you work within, that might be fantastic, has got your back covered and you don't need to see the PI policy. You do need to see it, you need to understand it, and you need to operate within it.
Yeah.
It's really simple.
And I'm sure if there's anyone out there that's working for a different firm, but, are interested to find out from some of our lessons, reach out to, I'm going to put it out there, reach out to yourself potentially and ask those questions, because I'm sure, you've lived through it and you understand it, and for the good of for the industry, and I think, and then they might decide to come and join Black Cat, which is what normally happens, but,
It's like a coffee. We like to be disruptive. Look, we like good people joining us on this journey. It's great. But for me, clients ask the question, alongside your quote, please tell me what exclusions, limitations, sublimits exist in your PI policies. And surveyors ask your employees to provide copies of their PI policies, because they're there to protect you and your clients, and they ought to provide them to you.
And that's a perfect kind of roundup of this matter. And as these things come along, you've got to come in, talk your way through and explain to me and the audience more about these kind of subject matters.
And on the next one, if we can talk about projects, due diligence, delapse, all that stuff's really good. This is quite a dull topic, but it's important.
It's a little bit dry, but I think it is really important, because it's something that sets us apart, and the conversation happen within the business of who is best to talk about it. And you've lived through this for 10 years of really understanding why it's a keystone to our business. So yeah, I think that's great. Thank you so much, Stephen.
Thank you.
Brilliant. Thank you everyone for joining. I look forward to welcoming you back next time.